Hello everyone, I hope you're well. So I'm selling GBP AUD right now through to the downside from this area all the way down to this 1.86911 area. And as you can see on GBP AUD right here on the daily time frame, what do we have here? The market was pushing through to the upside. As you can see, we formed a lot of liquidity. 1, 2, 3, 4, 5 touches of that trend line while pushing through to the upside. We finally had this impulse through to the upside there that left these order blocks, and all the way up as we are going up, we are forming bottoms as we are pushing through to the upside right there. In the previous video, I told you that GBP AUD wanted to liquidate the 1.90 psychological level. Right now, what we did is we just took out this 1.90 psychological level and we're starting to push through to the downside from there. So, in my humble opinion, I believe that GBP AUD is going to go through to the downside after liquidating that 1.90 psychological level and go through to the downside to try and take out at least guys, let me just draw this and then change its color. So at least from here, and then take out at least those two lows right here, the first two lows of the trend line. So this for me could be a target for GBP AUD. Let me just change the color of that, maybe to blue. Okay, so right here, from right up there all the way down to this 1.85 area almost. So I believe the market is going to go down from 1.90 to almost 1.85 and then we'll see where it goes from there. Now if I copy this and I go to my execution right here on GBP AUD and I paste it, as you can see, it's an area that starts right there and ends right here. So as you can see, my trade is just a portion of that push through to the downside, and then we'll see if GBP AUD offers us any setups as it's going down, as this trade, let's say, hits TP, and we'll see if it gives us any other setups that we can sell all the way down into this 1.85 area. Now as you can see right here for GBP AUD, what was happening? The market was pushing through to the downside, forming structure after structure. So it was, let me just find the tool, it was just pushing through to the downside and forming these lower lows and lower highs until we stopped right there. As you can see, we stopped, we went through to the downside, and then we pushed up right there. We broke through to the upside, and then we broke through to the downside right here. We pushed up, broke through to the upside, then broke through to the downside. So what is the goal of that push through to the upside right here? The goal of that push through to the upside, which is this one, is to take out the liquidity above these stops. After taking out, clearing out liquidity, I believe that the market can potentially continue going through to the downside. Now what we did right here is we did a first drive to the downside, we did a second drive to the downside. I believe that GBP AUD at least, sorry about that, at least has some potential to do a third drive through to the downside, take out that low where I'm going to be taking partial profits, and then let GBP AUD go through to the downside and hit my TP area. We'll see how that goes. So guys, as you can see here, the theory, GBP AUD wanted to melt down from 1.90 to 1.85800, and it did that. We took out those two lows right here. In the previous video, I bought GBP AUD all the way up into 1.90. In this video, I sold GBP AUD from 1.90 all the way down to 1.85800. Now I want to add one more thing, is that we did a 3 drive into the 1.90 area. I don't know if I said this before when explaining the theory. However, right now I see it. 1 push, 2 push, 3 pushes into the 1.90 area, and then the market melted through from there into this low right here and took it out. Now, I also want to talk about my execution right there. Market melted into my TP 1 to 3 risk to reward ratio, and then the rest just continued running with this like choppy movement through to the downside into 1.85800. Now, a lot of people ask me, why not this? I explained in the older video a little bit about this. However, I want to add additional reasons. Now, a higher risk to reward ratio means a lower win rate. Okay, because they are inversely proportionate. Okay guys, now a lower risk to reward ratio, of course, would then mean the exact opposite, a higher win rate. Lower win rate means more drawdown. More drawdown means more investors panicking and withdrawing, or more prop firms blowouts. Which means you most probably know that for prop firms, if you go 10% in drawdown, they take the account. So as you can see right here with this simple equation there, if more drawdown is equal to more prop firms blowout, I want to try to minimize this, or more investors panicking, I want to try to minimize this. The way I minimize this is by increasing the win rate. The way I increase the win rate is I decrease the risk to reward ratio. Very simple equation. I care more about my drawdown than to just like have this one trade that runs into my TP, because as I told you, I would much rather miss out on, let's say, an additional 2% in profits because I didn't hit this very high risk reward ratio, than to risk losing an investor or a prop firm account. For me, this right here, what I highlighted here, is a very good deal. I would much rather do this 1 to 3 instead of this 1 to 5, and maybe right here in this trade, yes, I would have won, let's say, an additional 1% on this trade, but me doing this all the time on a long enough time frame would risk me losing an investor, which is a lot of money. This would hit my pocket and I don't want it. And therefore this is my equation for why I try to take lower win rate trades, why I'm very safe with my trading. You don't see like very big moves from me. You don't see I want to 7, I want to 10, I want to 15 move from me, even though I highlight big moves in the market. I highlight big theories on higher time frames on what is about to happen. However, even though I have this ability, I have the ability to do this, I logically choose that with my execution, I'm going to divide my theory into smaller portions of trades and just be in, out. And then if the market offered me something right there, let's say the market retraces from there and offered me something here, then I would take it also all the way down. I'll be in, out, let's say, and then if it offers again, equation continues here until we reach our target. Okay, so in this case, unfortunately, we weren't offered multiple opportunities. The market just ran into our TP, which is a blessing in disguise. However, this is it, guys, for this video. Feel free to subscribe, notifications on, all the YouTuber stuff, and I'll see you in the next video, guys.